3, 4, 5, 6.
कोटा जाने वाली बीच राह में आधे टेस्ट देके हैं सिलेक्शन की चाह में।
ऑल इंडिया का बच्चा कोटा जाता है।
This rat race is for rats, not for humans. So why should we even be a part of it?
The Rat Race. This and more streaming on world's first news OTT, News 9 Plus. Download now.
Hello and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, let's begin with markets. Suyash joining me in the studio and also Amit Gupta of FinTech Capital joining us on the broadcast at this point in time. I want to come to you first, Suyash. Markets closed in green today. A good start to Monday.
A great start to Monday, Shweta. So Indian markets, after, we saw weakness throughout last week, Indian markets extended their winning streak to 2 sessions now, amid a slew of good earnings as well as buying interest in IT stocks as well as pharma stocks. Now at close, Sensex was up about 0.35%. It touched an intraday high of 66,067 levels and an intraday low of 65,748 levels.
All right.
Nifty on the other hand was up 0.4% at and closed just shy of 19,600 mark.
All right. I hope we can pull those graphics here very, very quickly. And what were the top gainers and losers today?
So Shweta, among top gainers were DV's Lab, Mahindra & Mahindra, if you remember, posted a good set of numbers where its net profit on a standalone basis more than doubled on a quarter-on-quarter basis. Now Mahindra, a lot of brokerages have reiterated their bullish stance on Mahindra & Mahindra stock. And as you can see, the stock was up about 4.33%. Among other winners were Sun Pharma, SBI Life and DV's Lab. Now among losers was Britannia Industries, which disappointed the street with its report card. Also, we saw some profit booking in Bajaj Auto and Tata Motors. Meanwhile, SBI and Axis Bank were among the financial heavyweights that posted losses in today's session.
All right, so Britannia there on the back of its numbers down by as much as 2.68%. Let's quickly get in Amit to weigh in on that stock. Amit, that is a significant dip?
Yes, I think in Britannia, the commodity prices marginally softened, the competition intensified. So to keep up the profitability, they basically, undertook certain price corrections to remain competitive and continue to drive the top line. So I think that's quite reflected in the numbers of Britannia for the Q1 quarter.
All right, and Sun Pharma also is an interesting stock we were tracking through the week yesterday. In fact, throughout the week, Suyash.
Yes, Shweta,
on the back of its numbers, which were not very good.
The numbers were mostly in line with the estimates. However, the street did not react positively to it, but we saw some a reversal in the trend, and Sun Pharma was among gainers in today's session. Now the stock, let me just quickly check, is up about 2% in today's session. So we have seen a reversal in that trend.
All right, so a reversal in that trend. And Mahindra & Mahindra, before we go to earnings season, Mahindra & Mahindra also on the back of good numbers, great SUV sales, an EV market plan which they announced very, very recently. All in all, stock performance reflective of a positive sentiment. Investors are perhaps bullish on the back of Mahindra & Mahindra's grand plans for SUV market that it has a sizable chunk of, and of course the electric vehicle market.
Also, the tractor business is doing exceptionally well. Now, Mahindra & Mahindra had about a 49.2% market share in the tractor segment, and it is expected to increase over the next few quarters. So, the tractor business, SUV segment picking up. Also, as you mentioned, the EV line that's in the pipeline, all that has boosted the sentiment for the stock, and investors, as you can see, are lapping up the stock.
All right, and what are the sectors that you were tracking this afternoon?
So Shweta, among sectoral indices, apart from bank, all sectoral indices ended in the positive today. Nifty IT and the Nifty Pharma were the top gainers. Nifty IT was up about 1.13% and Nifty Pharma was up about 1.56%. Now the trend in Nifty Pharma has been because the companies have been reporting a good set of earnings. Meanwhile, as far as Nifty IT is concerned, we are seeing a trend reversal where after a few sessions of profit booking, investors are once again interested in buying the stock as it seems that the valuations of the heavyweights are rather moderate.
All right, so those of course are top indices that my colleague Suyash continue to track. Let me quickly get in our expert Amit on some of the earnings that were announced today. And to begin with, Emami came up with its numbers. How are Emami numbers looking like, Suyash, before I get in Amit?
Yes, Shweta. So Emami posted a good set of numbers today. Now net profit went up by 86.6% to 137.7 crore in the first quarter of FY24. In the year ago quarter, it was about 73.8 crore. Meanwhile, revenue jumped about 7% to 825.6 crore from 773 crore in Q1 FY23. Now, EBITDA was up almost 10% to 190 crores from 173.4 crore. And the margin also improved slightly by 60 basis points to 23% in Q1 FY24 from 22.4% in the year ago period.
All right, interesting. Emami seems to have made a lot of profit, perhaps on the back of the fact that the raw material cost has been going down consistently. Amit, stock also reacted positively, up about 2.11%. How are you reading these numbers?
Look, Emami has been a sort of a underperformer over the past 5 years as compared to other FMCG majors. And the reason for that is, essentially they have been, the promoters have placed a lot of shares in the market and they haven't had a, stable margins and strong growth both coming together, for the past 5 years. But I think things are now changing. In this particular quarter, as Suyash also pointed out, there was some impact due to unseasonal rains. Remember they have a summer portfolio which is about 30% and a non-summer, portfolio which is almost 70%. So, seasonally this is a weak quarter for them if you take the whole calendar year. So there was in the summer portfolio, I think there was a decline of about 5%. But the other major brands like Navratna or Fair and Handsome, they had a strong double-digit growth into that. I think the market also got excited because of two reasons. One was that they announced a buyback of about 185 crores. So that was a big positive move towards the shareholders. And secondly, their whole strategy of selling out non-core assets over the last few years, that is seeing some strong traction. Remember, they sold their cement plants to Nirma 3-4 years ago. They are also in the process of deleveraging and selling their power plant to Brookfield. They're also selling their hospital chains to Manipal. So there is a lot of deleveraging in the balance sheets happening. In fact, the promoter pledge shares are also now down about 33%. It was as high as 90%, a few years ago. So I think things are looking good for Emami in the short term, and accordingly the street is reacting to it.
All right, things looking good for Emami, but things not looking very good for home appliances maker Whirlpool. Profits down by as much as 10.5%, if I'm not wrong.
Yes, Shweta. So Whirlpool reported a 10.6% decline in net profit. This was on the back of softer demand. Now the company said that unseasonal rainfall across regions and continuation of inflationary pressure have affected consumer spending. As a result, the net profit figure, Shweta, fell about 10.6% to 74.8 crore in this quarter versus 83.7 crore in the year ago period. Now, as you can see on the screen, revenue also took a hit. It fell about 2% on a year-on-year basis. In the year ago quarter, it was about 2,081 crore. In this quarter, the figure stands at 2,038.6 crore. EBITDA also took a hit. It was down about 6.4%, whereas margin, Shweta, declined by over 200 basis points.
All right, not so very good numbers there for Whirlpool.
The stock, although reactive after a blip where we saw some correction, it paired all losses, and actually it ended up with gave reasonable gains of about 0.8%.
All right, not too bad there for investors who are still bullish on Whirlpool, but I think this could just be temporary, Amit, given the home appliance maker is usually in the business of refrigerators, in the business of washing machines, and there's been softer demand for that in this season,
as well as increased competition.
And increased competition. So this season, which has seen a bountiful rain, could have hurted demand. So there was obviously weaker demand, but that could now pick up.
Yeah, my sense is the competition in the household appliances is quite severe at this point of time. As a result, there is no pricing power any of these companies have currently in the market. So since they cannot take price hikes, the margins are always restricted. In fact, Whirlpool US, which declared the results in late July last month, they actually told us that the Asian region sales is almost down 13%, and India is almost 75% of that Asian region sales. So I think the demand weakness continues. They cannot take price hikes, so the margins are restricted. So it's a competitive space, and if the demand goes down, then the numbers obviously get impacted.
All right, the demand is down, could likely pick up. Investors are still bullish. Let's move on to cement business. 2 cement companies reported their numbers today.
Both with estimates. Let's first talk about Ramco Cements. Now, Ramco Cements, it missed estimates on both profit and on revenue front. Now, the sales figure was hit by non-availability of sand in Kerala, supply disruptions due to rail accidents in Odisha and West Bengal, and an active monsoon in the northeast. While EBITDA margin, as you can see, which also declined by about 173 basis points, was affected due to higher fuel prices and weak cement prices in this quarter, Shweta. As a result, the stock also tumbled, but again, as the story goes, it was a day of buying, so it recovered losses and ended on a flattish note in today's session.
All right. And the other cement company, of course.
So, the stock of India Cements did not really do well. It was down about 4%. As you can see, the numbers were actually worse than Ramco Cements.
Okay.
The net profit, it reported a net loss of 87.4 crore in this quarter versus about a 80 crore profit in the year ago period. Meanwhile, revenue fell about 5.12% to 1436 crore from 1514 crore in the previous quarter. Now, EBITDA improved by about 20%, and EBITDA margin improved by 299 basis points.
Okay. Amit, would it be fair to say that it's been a mixed bag so far for cement industry and cement companies who have reported their numbers?
I think both the numbers which we have discussed, Ramco and India Cements, they are, their major operations is in south of India. And both the results were hit hard by higher cost and lower sales volumes. The price hikes which they took in the first quarter of this calendar year, they had to reverse, some of those price hikes. In fact, in the case of India Cement, they have to reverse almost 100% of the price hikes. And obviously the unseasonal rains which have, hit the South Indian market, that has also impacted the demand a lot. So I think that both the companies' performance was impacted by the increase in the cost of fuel and power. In the case of India Cements, I think there was impairment charges of almost 120 crores as well. And in Ramco Cements, again, the rail accident which happened in Odisha, that also killed the supply for almost, I would say, 20 days or so, which the company has reported. So I think in the short term, given that Q2 is a seasonally weak quarter, we could see some more pain going forward with things picking up in Q3 when the rains go away.
Okay.
So
Well,
Shweta, India
business could
Cements
pick up in
also
third quarter, yes.
had to write off a one-time impairment of certain investment and advances, which was about 114 crores. So if we add that back, the company would have posted a profit. in this
right.
quarter.
Both Ramco and India Cements not really living up to the expectations on the street. Amit, thanks very much for joining with your inputs. Suyash, before I let you go, what are the other big results we are expecting today?
So, Shweta, among other big companies that will come out with its results today are Godrej Consumer, Torrent Pharma, Max Healthcare and Tata Chemicals. Now, these are like, as we said...
And PB Fintech.
PB Fintech is
the
another
parent
one.
company
Yes.
for Policy Bazaar.
Important earnings to track.
Important earnings to track. Suyash, thanks very much for joining
Thank
with
you,
all
Shweta.
those details. We're going to shift focus now. The government has deferred the implementation of import restrictions on laptops, tablets, personal computers and other electronic items to 31st of October 2023. This essentially means that import of such items will be restricted from 31st, and one will need to obtain a license to get these items. The primary objective is of course to promote local manufacturing and curtail imports of these items from China, which currently holds about 88% of the import share. There are exemptions of course, and we'll discuss all those exemptions as you can see on your screens, but let's quickly understand what this means. Essentially, Karthik Malhotra who's joining us, we've been tracking this story. This essentially, from what I understand, Karthik, is that government said, okay, so let's ban this, came up with a policy document, amended the rules, notification was sent out, suddenly there were jitters, a lot of people started protesting, including a lot of people who really understood that this means PCs will get expensive, laptops will get expensive, and then next day government comes out with a fresh notification giving at least a 3-month deadline.
So, Shweta, I think 3 points here. Number one, obviously PCs, laptops, tablets are going to get expensive. They don't get expensive starting today. They'll start getting expensive maybe starting 1st of November, which happens to be the new deadline. And we have become a little accustomed to seeing the government sort of, do the seesaw to and fro. You launch a policy. It seems to be not fully baked, fully cooked. You get to start tinkering it, and then you defer dates and you change rates and you do all of that. We've seen enough and more examples of that. So I think let's not get into that criticism right now. That's a different debate altogether. I see this whole import restriction as 3 areas of impact. Number one, obviously by force you push for Make in India. You push for that 17,000 crore rupee PLI for IT hardware. Is it the most efficient way to encourage manufacturing? I don't know. Second, you want to hit China where it hurts the most. We have imported about $8 billion plus of laptops, PCs, tablets in the last financial year. A good almost 60% of that came from China. About $5.5 billion or so of our hardware imports on electronics used in computers and accessories came from China. Of course, our overall import bill with China is in excess of $80 billion. So there's $5 billion taken away from China in an election year. Great job. Obviously, China gets hurt, we feel happy. So from a political standpoint, geopolitical standpoint, okay, sure. Of course, the most neglected and the most hit audience in this is the middle class, is the Indian citizen, who will have to shell out more money to get access to PCs and tablets and laptops, and that is where the story really starts to smell. And the problem then obviously emerges from the fact that what is industry going to do about it? Because setting up factories overnight is obviously not easy. Finding new suppliers from other parts of the world, whether it is Vietnam or Thailand. And apparently this import restriction is not only to hurt China, but we also want to see what our FTA with, let's say, UK is and what our trade with Japan is, which also become essential, suppliers of components. So broadly, it's a customer who gets hit. Eventually, you will be in a situation that your PCs, your tablets, your laptops become more expensive, and you wouldn't have a choice but to sort of, pay for them. Last I checked, I think we had we had 3.9 million units of laptops imported in the quarter ending March 2023. This industry is set to grow double digit, about 11% or so this year, 13% next year. These are old estimates. I don't know how true they are going to be today with this import restriction set in. But an industry which was growing double digits, it was a fairly liberalized sector where you had likes of HP and Asus and Dell and Lenovo from multiple countries, originating from multiple countries, making their way into India, into offices and homes of the population at large. And obviously this section of society is now going to have to pay a higher value.
Let's quickly get in Avni Jain, who's an economist with HDFC Bank, who's joining us on the show. Also with us is Kumardeep Banerjee, Country Director, ITI Council. Both of you, thank you so much for taking time out. I want to come to you first, Avni. How feasible is a restriction like this? Or rather, the government rolls out a restriction saying that starting today with immediate effect, you cannot import so and so items, and then 2 days later comes up with a clarification that okay, do it for now, but we're giving you 3 more days to find different supply, 3 more months to find different supply chains, etc., etc. So firstly, to begin with a policy directive of this nature, to come up with such a policy directive without obviously holding stakeholder discussions, you know, how feasible does this look to you?
So I think I would see it in the light of the PLI scheme, which the PLI scheme of the IT hardware sector. So they have announced it in May. So from that, it seems like they want to push it further. So like if you look from that angle, it makes sense. But yes, like the ban and then the deferral of the bank shows that they did not think it through, and then at the last moment when a lot of people would have objected and industry would have gone and spoken that this is not done and how the work and the business as usual would prevail, then they try to extend it. But at the end of the day, it should be seen in the light of the PLI scheme and the push towards it.
Avni, in today's day and age, you know, do these restrictions really, you know, stand the test of time? We've ended license Raj quite some time back, decades ago, in fact 3 decades ago. License Raj is over. Liberalized trade, free trade across borders, globalization, the world is a global village. We've all come to sort of believe that. Do you think this is the right move from a pure economic standpoint to push for your own manufacturing, even at the cost of perhaps the quality standards not being met?
I get what you're saying, and especially from the angle of globalization, etc. It definitely goes against the spirit. But if you look at the overall global trend, what has been happening around the world, you would see every country since the US-China trade war is trying to push their own manufacturing. They don't want to get subjected to disruptions in the global supply chains and held victim to that, especially after COVID. If you look at all inflation problems and all supply chain issues were majorly because China was closed and other parts of the world were closed. Now, if you look at Russia and Ukraine disruption, that causes a huge disruption in the commodity market. So I think from the government's point of view, they are sort of trying to protect their own supply chain as well.
Kumardeep, is this a political debate or is this pure economics? How do you see this?
Hey Karthik, hi, and Shweta, hello. Sorry I could not again join you in the studios, but yeah.
You should. We have a nice, funky new studio, Kumardeep. We were hoping that you'd be able to join us physically, but next time.
I will, next time, for sure. For the timing, let me use the laptop for joining in. Which is
soon going to get expensive, by the way.
Sorry?
Which is soon going to get which is soon going to get expensive when the new policy comes into effect.
Yeah, that's what we are dreading. Coming straight to what Karthik asked, Karthik, you answered the question yourself that it's more of a geopolitical debate currently, and it's political, but it's geopolitical more or less. Now, we as Information Technology Industry Council, what we are asking is the government to get into a formal stakeholder consultation, involve every player, because industry forms a key part of this $1 trillion digital economy journey, of which manufacturing is a big element. And many of our member companies, most of our member companies are all invested into this $1 trillion, towards this $1 trillion digital economy. All we are asking is, since industry is an equal stakeholder, is one of the pillars for driving this or towards the goal that we have set, which is $1 trillion digital economy, we are asking the government to now come to a consultative table and bring out a consultation and understand what could be a feasible solution instead of coming out with these restrictive orders, instead of coming out with these restrictive trade practices. Because even if it is deferred by 3 months, that doesn't take away the fact that there is going to be a license regime. Even if there is a license, one doesn't know what are the conditions that would be attached with that license. How will these, and in the interim, as you rightly pointed out, that there are chances that there could be a bit of hoarding, there could be black marketing. We were hearing about those last week when some of those, some of the stockists and some of the retailers were actually hoarding some of those pieces until the government had to come out with an extension so that none of this happens during the festive season. So these things, in an uncertain environment, these things can really lead to consumer choices being restricted, and therefore all we are asking is that please come to a consultation with all concerned stakeholders to revise the restrictive trade regime in a way that will advance India's objectives and facilitate foreign investment and comply with the international obligations and norms.
Kumadeep, I have to, just quickly understand from you. I think from what Avni also said, what I also believe, and from what we've been seeing in the post-pandemic world, every government, every administration has the right to come up with protectionist measures to protect their own supply chain, to protect their own manufacturing industry. Now, they've given you 3 months and you've been asking the industry, and since you're a representative of the industry, allow me to use you and they, you've been asking for time. They've given you 3 months time, which is good enough a time to find alternatives, to to clear your inventory, to come up with better supply initiatives, to figure out where you can import from, and also 3 months a time where you can get a license and then start importing using that license. The government at no point said we will not allow you to import. All they've said so far is that you can import, but with restrictions. Perhaps they want to know where the industry is importing from, which parts, which countries, etc. So I see no harm when I look at the fine prints of that notification as it came out.
Well, first we are talking about coming to a stakeholder consultation because the government so far in most of its digital policies has adopted a consultative approach so far as the digital policies is concerned. You saw that the digital personal data protection bill, which got cleared by the Lok Sabha a short while back, it went through a 5-year process. Similarly, if you are trying to impose a new regime, which might be in the interests of what the government thinks best, but having said that, there should have been a consultative approach which should have been followed. Secondly, you mentioned about a license. We are not even talking about whether we need to get into a licensing regime or the license Raj, so as to say, or not. Third, we don't know what are the conditionalities that are going to be put in with the license. So all of these needs to be sorted out through a stakeholder consultation before imposing such a restrictive regime is what we are asking for.
Kumardeep, sorry, I'll just step in for one more question and then we'll move this debate back to Avni. So is there a sizable challenge that you see right now with, let's say, China off the table when it comes to importing laptops, and other countries like Vietnam and Thailand, which have indeed become laptop capitals of the world from a manufacturing standpoint, to become the go-to markets? Is that not something that the industry can embark upon immediately and supply and find these new suppliers from those new markets?
See, if I get my supply chain knowledge correct, then this is not the way supply chains can be shifted. And to be sure, the government has not mentioned any geography when it came to announcing the policy. So
yeah, not yet anyway.
We don't know whether it is, Yeah, so that's what I'm saying, that there should be a transparent regime wherein all the stakeholders are consulted. The real life infrastructural problems should be taken into account before trying to impose a restrictive regime, and also thorough knowledge of the market that exists in India and how it is going to impact the consumers.
Okay. Avni, let's bring this back to you. 17,000 crore rupees PLI earmarked for IT hardware. Even if that were to be taken up by the industry, we are looking at least a year, if not more, before some factories can be set up and Make in India can actually happen. What does India do in the interim?
I think, if I'm correct, already around 44 companies have shown their interest in terms of getting registered under the PLI. So, if there are so many companies which are coming up and showing the interest, I think this can be taken up rather quickly as compared to what the timelines we have been thinking forward to. And also with this PLI scheme is not new. The government earlier started, or I would say rather announced it in 2021, and at that there was not much of an interest. So I understand like there would be some hiccups in terms of setting up capacity, but it's not that we can't do it.
I know, I'm just talking about the time. I'm saying it will, to set up a factory, to acquire land, to get the raw materials imported, to find the talent. Setting up a factory is not something that can be done overnight. It is going to take at least a year or so. Until then, it's the consumer who ends up paying that delta, caused by the import deficit and hence the increased prices. So where does this leave us for, let's say, the next 1 year, 1.5 years, until we find Make in India laptops? Which right now, I think, honestly, apart from the Geo book that just got recently announced, we don't have too many options in India. If you look at the stacking order, it is HP, it is Asus, it is Dell, it is Lenovo, and all of these are imported. So what does India do in the interim? Because this industry is a high demand industry. It will have to continue growing in double digits to just meet the needs of the public. And I'm not really talking about contributing to GDP yet. I mean, that is a secondary sort of requirement.
I agree with respect to the disruptions point that you are coming up with, that it is going to cost consumers a lot, and in terms of work, etc. also it is going to disrupt the entire chain of services, etc. Yes, it's going to I would say disrupt. I won't say like it would make it rather a make or break case, but yes, disruption is definitely going to be there. And from a consumer standpoint of view, I would see it as in between. If you remember, there was a semiconductor shortage which led to disruption in the auto industry. So something of those sorts. And perhaps like if there is so much disruptions, then the government might again extend the timeline or
yet another flip-flop, yet another seesaw, yet another change in timeline. Kumardeep, before I let you go, one final question. In the short run, next 1 year to 18 months, let's say by the time elections end and the new government is in place, what is the kind of delta that consumers should expect on their laptops, PCs, tablets? How much more do they have to shell out?
How expensive do they get?
Percentage terms. I think you're on mute, Kumardeep.
Sorry, I am neither a cephalogist, neither I am an astrologer. So
I'm just giving, I'm using elections as a timeline, nothing else.
Yeah, so I was coming to that point, that elections are around the corner and we are talking about a knowledge economy, a digital economy, which is powered by laptops, tablets, and we have seen that the
and a record number of middle class citizens paying enormous taxes, highest ever number of taxpayers.
And the current digital economy, if you see, is driven by the startup sector and the services industry, all of whom have to rely on these tablets, laptops for their day-to-day functioning. Also with the COVID related restrictions and different kinds of restrictions coming in due to either natural disasters or something like that, laptops and PCs have become a commonplace for
how much more expensive will they get?
Their normal work.
Kumardeep, so, we are running out of time. How much more expensive should we expect them to get in the next 1 year?
I am not going to predict that.
Okay, no problem. We'll
not going to hold you to an answer.
I hope that it doesn't, and we come to an amicable solution in the interim.
All right, Kumardeep, Avni, thanks very much both of you for taking time out. We're going to absolutely bring you those figures if and when they get expensive, Karthik, especially to you and to our viewers. But let's move on for now. India's leading IT player Infosys has introduced a new name in the market and it's creating buzz. Topaz is Infosys' latest artificial intelligence offering. Now, Topaz is set to combine data, analytics and artificial intelligence to create efficiencies across the enterprise. It is set to utilize smart tools, platforms and autonomous software engineering for business agility. But Infosys is not alone. All leading tech players in India are already in the fray. In fact, the game is heating up, Krishna.
Oh, absolutely. You look at the tech giants of India, so to speak, Shweta. Infosys, TCS, Wipro, all three of them in the recent month, in July that is, have now made big announcements of what they're going to do. So TCS and all three of them, if you take a look at what they're doing, they're all not just investing a lot of money and working on AI projects and providing AI solutions to customers. What they're also doing is training their workforce. In fact, Wipro, for example, the target is to train all 250,000 employees of Wipro in AI. TCS, for example, has trained already 50,000 employees in its workforce in the basics of AI. And all these companies, TCS and Wipro, they're partnering with Google and Microsoft to train employees because TCS, for example, is working on the Microsoft cloud platform, which is Azure, and also it's also working with the Google's own AI suite as well. Similarly with Wipro as well. And for example, and they're launching individual products. For example, Wipro has Wipro AI 360, which is a end-to-end AI-based ecosystem that it's developing. Infosys, for example, is developing something called as Topaz, which is Salil Parekh, the MD and CEO, says, the Topaz platform, AI platform of Infosys, reinstates Infosys's leadership in artificial intelligence. So that's the kind of confidence that Infosys has on its Topaz platform as well. So Wipro has Wipro AI 360. Infosys launched its AI-first offering, Topaz, and it uses generative AI to amplify efficiencies and also, more importantly, building connected ecosystems. And if you see, Infosys' Topaz has this responsible by design philosophy. Responsible AI is also a common theme running as far as the AI gambit, the artificial intelligence gambit of all these big tech players are concerned. So they want to do AI, they want to do an ecosystem which has AI at its core, use generative AI, because people think that there's only one kind of AI. ChatGPT, for example, uses a particular kind of AI or a particular kind of artificial intelligence called as generative artificial intelligence. So TCS has its own generative artificial intelligence platform that it's developing. So TCS, Infosys, Wipro, all of them. Wipro, for example, investing $1 billion or set to invest $1 billion over the next 3 years as far as AI and data analytics investments are concerned. So big investments and training taking place. Even companies like Tech Mahindra has recently, when they came out with their quarterly results, said that for the first quarter alone, Tech Mahindra has trained 8,000 employees in AI. And it's working on a clutch of AI projects and different stages, some in implementation, some in pilot stages as well. And so with HCL Tech as well, HCL Tech is tying up with Google and Microsoft to train nearly 30,000 of its employees in artificial intelligence and has over 140 artificial intelligence projects that it's working on. So, this is peaking right now. Over the course of the beginning of this financial year and the end of the last financial year, we've seen companies drawing out their artificial intelligence game plan, putting money into it and also putting people into it and training them as well. So,
all right, so training them, putting money into AI game, but many of these tech companies or other employees of these tech companies have been fearing since and I remember this was way back in December, January of this year when we started talking about ChatGPT. The word became a common buzzword around January, February, all throughout. From them up until now, we've reached, I think it's just the start of a curve, and correct me if I'm wrong, Krishna, but we have not even reached the peak yet.
Oh, not at all.
And through these companies, perhaps, it's India which will be realizing its artificial intelligence dream, because we are very, I think we are at a bottom when it comes to progress that has been made in artificial intelligence space.
That's according to ChatGPT's founder.
Yes.
He was quite dismissive and said that no, India, as far as India is concerned, and the Indian ecosystem is concerned, it's going to take many years to catch up with ChatGPT. But you can't generalize what's happening in India because of one comment from one founder of ChatGPT.
But I think
what is happening here, that's the point I'm trying to make here. ChatGPT is a particular product based on generative artificial intelligence, which is leaps and bounds ahead of anything else in this world. Is GPT-4 now. So there's no doubt about the ability of a product like ChatGPT is the Facebook of social media. So the future is artificial intelligence. ChatGPT is going to play a huge role in it, and generative AI is going to play a huge role in it. But the fact of the matter is that AI is being looked at in a more holistic way by Indian tech giants. So Indian tech giants think that right now, be it in Infosys or Wipro, they want to provide AI-based solutions to accelerate business growth to consumers. That's what Topaz is all about. If companies come for consulting for them, so they want to consult tech consultancy on cloud and data analytics and artificial intelligence. It's a virtuous cycle. And also, going one step forward, even as is cloud computing, quantum computing, data analytics all in the mix, they want to keep artificial intelligence at the core of all of these things. And that tells you, the kind of bet that these big tech giants are making on artificial intelligence as a platform per se.
Right, and money is therefore coming in from private players, much needed, albeit a little late, but perhaps will play catch up very, very fast. And the progress and the strides that we have made so far are commendable. Krishna, let's move on to another important story that we're tracking, and that is the food regulator of India has in fact started going after adulterated and dietary supplements that are substandard. Most of these supplements are protein powders and other dietary food items. According to the information that was shared in the Parliament recently, Food Authority has cracked down on samples collected that were found to be non-compliant with set standards, basically substandard products that our athletes and gym goers are consuming at a very fast clip. The Food Safety Standards Authority of India, FSSAI, and state bodies have lodged 91,153 civil cases, 13,632 criminal cases against manufacturers of such items in the last 3 years, starting 2020. We are hoping to talk to Dr. Arun Gupta, who is the convener of Nutrition Advocacy in Public Interest, very, very shortly. But before I do that, Krishna, it is a serious problem, and problem is that of adulterated supplements. In this case, protein powders specifically, and the authority there cracking the whip on all these supplement makers, all these manufacturers who are not just present, by the way, in and around Delhi. These samples were collected, if you go through the data, from different parts of the country, north to south.
Right.
So a concerted attempt being made there by FSSAI to perhaps get hold of these manufacturers and punish them, penalize them.
Right. It's also part of the FSSAI, or the Food Safety and Standards Authority of India's continuing ongoing drive in terms of surveys. It does surveys every year. Last year it did a jaggery survey to check jaggery adulteration. It also did a milk survey last year to check milk adulteration.
Right.
So it's part of a survey that began March 2023, and now the focus is on supplements.
Right, and Dr. Arun Gupta is joining us. Dr. Gupta, thanks very much for taking time out. I want to understand from you, how big is this problem, sir? There was this data that has come out from the last 3 years now. There was data that came out from the last financial year, talked about number of civil cases and criminal cases that the government, FSSAI, has started against some of these manufacturers. How big is this problem? Dr. Gupta, can you hear us? All right, it doesn't look like Dr. Gupta can hear us at this point in time. We'll try and get him back, but it is a big problem. It is a problem because there's data that has come in not just now, for the last 3 years, but if you look at the past data, specifically with respect to dietary supplements, because it's now a fad, Krishna. Every person who is either going to the gym or, perhaps hoping to build muscle mass, the first thing they go to is protein powder. Yeah, and supplements, protein supplements, whey protein, these things that you see on these big boxes. For example, I was talking about previous surveys being conducted. FSSAI in 2021 conducted a survey on trans fat.
in food products. So this is clearly, as you rightly mentioned, it's a fad, it's a trend. It's been going on for a while with all the rush for gyms in the country. The rush for protein and protein supplements and whey protein has only gone up. And 13,000 criminal cases is a big number, and then is in fact saying that so many operators in the market are there who are willfully operating with adulterated content, and that's got a lot to do with licenses being given out to businesses. Are the right kind of licenses being given out to the right businesses? Do they know that these are food manufacturers who have been given licenses? Because a lot of times what happens in India is that small businesses are given licenses without knowing that they're food businesses. So food businesses require different due diligence before they are granted licenses. So it goes back to that. How many players are there out there in the market making these protein supplements who've been given licenses to operate in the right way? You have to go back and check many of these licenses. That's what I think this will eventually head back to. But for now, this is a survey that began in March 2023, and we're looking at the results here in July. And the results are the ones that are throwing up the alarm bells, the proverbial alarm bells, so to speak, because so much consumption takes place of these protein supplements.
All right, massive consumption, very limited oversight. Companies that start out sometimes at home and start branding and start selling products on Amazon, Flipkart, because marketplace essentially has made it easier. E-com marketplaces made them easier to reach out to a lot of consumers who are sitting in different parts of the country, and many of these supplements are found to be adulterated. The Food Safety Standards Authority of India cracking the whip and lodging as many as 13,000 criminal cases on manufacturers who are producing adulterated protein powder that is not in line with the set standards of India, set standards that have been put out by FSSAI. We're going to end this bulletin, Krishna. With that, it's a wrap on this bulletin. Thanks very much for watching.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first? So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia, and it's a mess for the Western world, for NATO and the United States.
Putin is a dictator, and if he loses, that means the end of his regime, and probably of him personally. So he has to keep going.
Year 2, no end in sight. Streaming now. Gautam Adani, one of the richest men in the world, or a business honcho, accused of manipulating the market.
अदानी जी 609 नंबर से दूसरे नंबर तक कैसे पहुंचे? सिर्फ एक सवाल पूछा, नरेंद्र मोदी जी, आपका अदानी जी से रिश्ता क्या है?
He has given the space, the railways, the airport, which he has no experience also. So the country's interest has been compromised.
Government has been very clearly supporting few industrial groups, including Adani's industrial group.
Target Adani, streaming now.
मैं इमरान अहमद खान नियाजी